Quiet now, everybody. Quiet, listen to me. We're going to start a show. Now, some of you people have been with me before. You know it's going to be a tough grind. You're going to dance until your feet fall off. You're not able to stand up any longer. But we're going to have a show.
Welcome to the Pink Door Podcast.
It's great to be back. And today, we've got a really interesting one, I think, because we're looking back at a specific moment in time that, well, on paper, looks absolutely bonkers.
Bonkers. Is that a highly technical real estate term I should know?
Strictly technical. It's right in the textbooks next to location, location, location. But seriously, we are doing a deep dive into the real estate numbers for Halifax, Massachusetts. We're looking at what happened just last month, December 2025.
Right. It's mid-January 2026 now, so the holidays are over. The New Year's resolutions are maybe starting to wobble a bit.
Just a little.
And we finally have the hard data, the closed books from December. And I have to admit, when I first opened the RPR report you sent, that's the Realtors Property Resource Report for anyone listening.
Right.
I honestly thought I was looking at a typo.
You saw the median price.
I saw the median price. It says right here, the median sold price for Halifax in December hit $750,000.
$700,000 in Halifax.
Yeah. That's a 30.37% increase from the month before. 30%.
It is a staggering number to see in print.
It's terrifying. I mean, put yourself in the shoes of a buyer. You've been saving up. You're finally ready to go. You blink, and 30 days later, the market is 30% more expensive. Yeah. That doesn't feel real.
Feels like a crypto chart, not a housing market.
Exactly. And that's why we're doing this.
Yeah.
Because if you just read that headline, Halifax prices jump 30% in 1 month, you'd panic. You'd just give up.
You'd renew your lease for another 5 years. And that's our mission today. We need to tear that number apart. We're going to look at the MLSPIN data, the actual sold sheets, and figure out what really happened. Did the market explode, or is the math just, playing tricks on us?
Okay, let's do it. Let's put on our detective hats. Because I'm also seeing the estimated property value, what the computers think these houses are worth, is way lower, like $594,000. Mm-hmm. So that's a $100,000 gap between the algorithm and what people actually paid. How does that happen?
It comes down to one of the most common traps in real estate stats, especially in smaller towns: sample size.
The small town, small month problem.
Exactly. I mean, this isn't downtown Boston with hundreds of sales every month smoothing out the averages. This is Halifax. And in December, which is historically the quietest month of the year,
right,
you might only have a handful of sales. And when your sample size is that small, the median can get really volatile.
Okay, a quick refresher for everyone. Median is the middle number, not the average. If you line up 5 sales, it's the price of number 3.
Precisely. So imagine a month where only 5 houses sell. If 3 of them just happen to be huge, expensive homes, your median is going to skyrocket.
It doesn't mean the little 2-bedroom ranch down the street went up in value.
Not at all. It just wasn't the flavor of the month. And December 2025 in Halifax, that was the month of the big colonial.
I have the sold list right here. You are not kidding. These are not starter homes.
No. To get that median up to over $700,000, some real heavy hitters had to close. Take a look at One Lamppost Drive.
Yeah, I'm looking at it. This thing is significant. 10 rooms, 4 beds, 3 full baths. It's a big classic colonial.
And what did it close for?
$842,000.
That's a huge sale for Halifax. And think about the timing, mid-December, to close on a house like that right before Christmas. That's serious motivation.
And it wasn't the only one. I see another one here, 139 Fairway Drive. This one looks even bigger.
It is. Nearly 4,000 square feet, 13 rooms.
Wow. And that sold for $800,000 flat.
So you see what happened, right? In a normal month, say in June, you might have 20 sales. Those 2 $800,000 homes would be balanced out by a bunch of ranches and capes.
But in a quiet December, they became the market. They just dragged the median way up.
They skewed the whole thing.
Okay, that actually makes me feel a little better. It's not that every house is suddenly worth $700. It's more that the only things that sold were the most expensive things on the menu.
Perfect analogy. The burger is still the same price. It's just that everyone ordered steak last month.
Okay, but even if we can explain away the price jump, we can't ignore the speed. Because the rest of this report shows that things are moving frighteningly fast.
That's the part of the data that's not a fluke. The price is a quirk. The speed is very real. We have to talk about that seller's market gauge.
Right. The RPR report has that little speedometer graphic. Mm-hmm. And for Halifax, the needle is just buried. It's all the way on the seller's market side.
And the number that's driving that The one that really keeps me up at night if I'm working with a buyer is the median days in RPR.
It says 8 days.
8 days.
Let's just pause on that for a second. This is December. It's dark at 4.30. People are thinking about holidays and family. You'd think real estate would just go into hibernation.
That used to be the wisdom, wait for spring. But 8 days turns that completely on its head. It means that even with the holidays, buyers were just glued to the listings.
So what does an 8-day timeline even look like for a buyer?
It's an absolute sprint. The house lists on a Thursday. You can't wait for the weekend. You have to see it Friday. The open house is Saturday. By Monday morning, they're calling for highest and best offers. By Tuesday, it's gone. If you wait until the next weekend, you missed it completely.
That's exhausting. Why is the pressure so high? Is there just nothing to buy?
We are in a scarcity environment. You have to look at the months of inventory figure. It's a simple metric. If no new homes came on the market, how long would it take to sell everything?
And a balanced market is, what, 6 months?
5 to 6 months is healthy. Buyers have choices. Sellers have to compete a bit. In Halifax right now,
1.5 months.
1.55. That is incredibly tight. It's like a game of musical chairs with 10 people and only 1 chair.
Which would explain why sellers are getting whatever they ask for. I'm looking at the sales to list price ratio.
Did they get their price metric?
And the answer is basically yes. It's 97.8%.
Almost 98%. And remember, that's an average. In some of these hot price points, it's 99 or even over 100%. If you price a house correctly in this market, you are getting your number.
So if you come in with a lowball offer thinking you'll get a deal.
They won't even respond. They'll just move on to the next offer in the pile.
Okay, so the headline price was skewed, but the market heat is real. I want to pivot though, because not everyone is looking for a 4,000 square foot colonial. What about a normal house or a first condo?
And this is where the data gets so interesting. It's like a tale of 2 markets hidden in these numbers.
I noticed that. We talked about the $800,000 homes, but then there's this whole other layer, like 44 Oak Place.
Yes, let's talk about Oak Place. This is a great example of the normal market. It's a Cape Contemporary style home, 2 beds, 2 baths.
A very different house than the big colonials, and it sold for $600 and $1,500.
A solid price. But look at its listing history.
It
Yeah.
was listed for $609,900.
Exactly. It sold for under the asking price. Not by a lot, maybe $8,000, but it shows there was some negotiation happening.
That's interesting. So the $800,000 homes are going at or above asking, but the $600,000 home took a little haircut. Why?
It just suggests that the buyers in that $600 K range are more price sensitive. They're probably using mortgages, watching interest rates. They aren't just writing blank checks. They're still negotiating a bit.
But then you drop down to the entry level, and this is where it feels like the scarcity is the most intense. You pulled some condo data.
Yeah, this was the aha moment for me. You hear median price is $700,000 and you just think, I'm priced out of Halifax. It's impossible.
Right.
But look closer. Nearly half of the sales in December were actually condos between $325,000 and $350,000.
Yeah, the total split. You have the $800K crowd and the $350K crowd with not much in between.
It's that missing middle. Take a look at the Twin Lakes development.
Okay, I see 192 Twin Lakes Drive. Sold for $324,900.
Mm-hmm.
And then 2 Leiden Lane, Unit A1, sold for $353,000.
These are the entry points. If you're a first-time buyer in Halifax, this is your world. You're not competing against the colonial buyers. You're competing against every other first-timer and every downsizer who wants something under $400.
And I bet with inventory this low, those condos are getting multiple offers too.
Oh, absolutely. That price point is the most competitive part of the market because it's the most accessible.
Okay, so that's what sold in December. But what if I'm listening to this in January and I need to buy something today? We pull the active listings to see what's on the shelf right now.
And this is where we need to talk about a metric that I think is even more important than the list price.
Yeah.
Price per square foot.
The great equalizer.
It really is. It strips away all the other stuff and just asks, how much house are you actually getting for your money?
Let's apply that. On the single family side, there's a place at 1 John Wade Drive.
Right. 4-bedroom single family listed at $619,000. And notice it says active under contract.
Which means they already have an offer, but they're still showing it just in case.
Exactly. The deal's not done, but you're fighting an uphill battle. But let's do the math on the price.
Okay, so for $619,000, what's the per square foot cost?
It comes out to around $403 per square foot.
$403 a foot. Okay, now let's compare that to an active condo. I see one at 477 Twin Lakes Drive.
Yep. Listed at $334,900.
And the math on that one.
It works out to about $247 a square foot.
Whoa! That is a huge gap. You're paying almost double per foot to get into a single-family home.
That is the premium for the yard, for the privacy, for no condo fee. But from a pure space for your dollar perspective, the condo market is a massive value right now.
It really puts a price tag on not sharing a wall, doesn't it?
It does. And for the people who decide, yes, it's worth it, the target is listings like 37 Anawan Drive.
I see it. 3-bed, listed at $590,000.
That's right, in that sweet spot, just under 600 tailors. That is going to be an absolute war zone this spring. The 550 to 650 range is where most of the buyers are.
It sounds like we're painting this picture of a bulletproof market. High prices, fast sales. But I always want to look for the cracks. Is everything really perfect?
It's never perfect. Even in a hot market, life happens. People run into financial trouble.
You're talking about the distressed section of the report.
Exactly. You have to look at it to get the whole story. The report shows 3 properties in some stage of distress, meaning pre-foreclosure or foreclosure.
I see 63 South Street, newly filed complaint. What does that mean?
That's usually the first legal step. The lender is basically putting them on notice. It doesn't mean the house is for sale yet, but it signals trouble. Then you have 13 Jordan Road, which is further along, notice of foreclosure sale.
That's really tough. It's just a reminder that even when the market is hot, individual families can still be struggling.
They can. But here's the key difference between now and, say, 2008.
In 2008, a foreclosure would just sit there and drag the whole neighborhood down.
For years. But today, with inventory at 1.5 months.
It gets scooped up.
Instantly. Investors or even just handy buyers are desperate for anything to buy. So while it shows distress exists, it's not a sign the market is about to crash. The demand is just too high to let anything sit.
So let's bring it all together. We've looked at the sold data, the active listings, the high and the low end. What's the final headline for the Halifax market right now?
The headline is high velocity.
High velocity.
Everything is moving fast. The inventory is critically low. And while that $700,000 median is inflated, the underlying strength of the market is very, very real.
So what does that mean for our listeners? If I'm a seller in Halifax right now?
You are in the driver's seat, especially if you have one of those larger colonials like we saw on Lamppost or Fairway. We now have proof that people are willing to pay over $800,000 in Halifax. The demand is there. You have almost no competition.
And if I'm a buyer and I see that $700,000 number and I just want to give up?
Don't panic, but you have to be prepared to sprint. Don't let the median scare you. There are still homes in the $350,000 to $600,000 range, but you have to remember that days on market stat, 8 days.
Speed is everything.
It has to be. You can't wait for the weekend. You need your pre-approval letter in hand, your agent ready to go, and you have to be ready to write an offer almost immediately.
That is the reality. Be aggressive.
And here's the thought I want to leave everyone with. All of this data, it's from December and January, the dead of winter, the so-called slow season.
And even in the slow season, we have 1.55 months of inventory and rising prices.
Exactly. So what happens in 3 months?
The spring market.
What happens when the weather gets nice and all the real buyers come out in April and May? If inventory stays this low, but demand doubles?
We could see a real price explosion.
We could. This 30% jump might end up looking tame. That's the real question we're facing. The slow season might have just been the calm before the storm.
That's a wild thought. If you're waiting for spring to buy, you might be walking right into a buzzsaw.
It's a real possibility.
Wow. Well, we will definitely be here to track it. For now, that is the reality of Halifax real estate.
It's a fascinating snapshot, that's for sure.
Absolutely. Now, before we go, we want to make sure you know who to call if you were trying to navigate this absolutely wild market. If you have any questions about this episode, or if you are thinking about buying or selling a house anywhere on Boston South Shore, from Southie to Sagamore, give Jim Aldred a call. He would love to speak with you, and he wants to provide you with guidance and security to help your family move on smoothly. Thanks for listening, and catch you on the next episode of the Pink Door Podcast.